Hello and welcome to this session. This is Professor Farhat. In this session, we're going to be dealing with the Internal Service Fund, and we are going to adding the Internal Service Fund to the government-wide financial statements. So let's not lose track of what we are doing in this series. What we are doing is adding certain funds. So in the prior 3 sessions, we started by adding the capital asset fund, then we added the long-term debt, then we added revenues, expenses, and eliminated inter-fund transfer. So in this session, what we are going to be doing, we are going to be working specifically with the Internal Service Fund. And hopefully you remember what an Internal Service Fund is. Let's go back. Let's go to the PowerPoint slides and start the process. So what is the Internal Service Fund? It's a fund that serves other government within the government. Okay. Generally, they are included in the governmental activities. Generally, they are included in there. And which accounting method do we use for the Internal Service Fund? Actually, we use accrual accounting. So it's easy for us. They don't use modified accrual. They use accrual accounting. So that's easy. So we include it with the governmental fund. However, if the Internal Service Fund provides services mainly to the department in the enterprise fund, then it should be reported in the business activities. That's not common, and for our purposes, we're going to assume it's going to be included with the governmental fund. So let's go ahead and look at the worksheet entries and what do we need to do. The first thing we need to do, we need to add the internal fund's assets and liabilities to the government activity section of the governmental-wide financial statements. So first, put the assets and the liabilities on the books, including the net position. Then, if there is any income/expense of the Internal Service Fund with entities external to the governmental activities, it should be brought to the statement of activities. Simply put, if the Internal Service Fund had any activities with outside parties, that's not the norm. They don't deal with outside parties. But what type of income or expense they could have? They could have interest expense, or they might have investment income. So those are 2 typical income or expense that they could have with outside party. If they do have those, then we have to include those in the statement of activities of the government-wide financial statement. Then we need to reduce or increase government expenditure by the amount of the Internal Service Fund, either operating income or deficit. And we're going to explain this once I do the journal entries, or once we look at an example. Then we're going to eliminate inter-fund activities between the Internal Service Fund and other fund represented within the governmental activities. Then we would eliminate the Internal Service Fund. And these are the journal entries. So this is journal entry 1 to put the assets and liabilities on the books. So we debit the assets, we credit the liabilities, and we credited the net position. So this is entry number 1. Entry number 2, assuming here we have investment income, what we do is we credit investment income to add the investment income, and we reduce our net position. We reduce our net position and add investment income to the government-wide financial statements. Here we're assuming that we have a profit, and I will explain this in a moment. What we do is we debit net position and we credit general governmental expenses, and we'll explain this in a moment once we work with an example. And the third entry is to eliminate the transfer in, credit transfer in, and debit net position. So those are the journal entries, and those are the description, but we're going to look at an example. Okay, so let's take a look at this balance sheet. We have assets, we have more assets, then we have liabilities, okay, then we have the net position. So the first thing is to do what? Is to add the assets and liabilities to the book. So the first journal entry we need to make is to add the assets and the liabilities to the books. Let's go ahead and do so. So this is pretty straightforward. What I'm going to do is I'm going to debit, let's do it right here. I'm going to debit cash, 3,500, debit investment, 50,000, debit due from other funds, 55,000, debit inventories, 233,500, debit land, building and equipment, land, building, equipment, that's 80,000, 270, 140. Then I'm going to credit accumulated depreciation, 27,500. So I'm done with all the assets. Then I'm going to credit liabilities. I'm going to credit accounts payable and advance from utilities. I'm going to credit AP, 11,000, advance from the utility, which is an enterprise fund, 190,000. Okay, then I will credit net position 603,500. So that's the first entry. And this is what I meant to say. This is what I said. You add up all the assets and the liabilities. That's good. So basically, because they are already on accrual basis, so you don't need to make any adjustments. The next thing you look at is you would look at the statement of revenues, expenses, and changes in fund net position. Basically, you would look at the income statement and retained earnings. And what you see here is you see that operating revenues were 377, operating expenses were 372,500. This fund made a profit of $4,500. Now let me ask you this. Who did we say this fund deals with? This fund deals with other governmental activities. This governmental fund deals with other governmental activities. What does that mean? It means this fund charged other governments, charged other governmental fund, let's assume the general fund, okay? They charged them services, and what happened is they charged them for those services. The other fund incurred an expense. So simply put, we have 4,500 in revenues here. What does that mean? I'm sorry, not revenues, in profit. This is profit. Okay, this represents income earned from transaction from other governmental department. So what happened? We added them here, right? But what we did in the other governmental fund, we have expenditure and an extra expenditure of 4,500. So what do we need to do? Simply put, okay, so if an internal service fund has a positive operating income, okay, the expenditure reported in the general fund, it's going to overstate the cost of running the government, because those are both governmental entities. Okay, so what we did is, when we look at the governmental fund, it's going to be overstated their expenditure by 4,500, and that overstatement of expenditure is our profit. So basically, in a sense, this is an overstatement of expenditure. So in other words, because this is within the same government. So what do we need to do? Under those circumstances, we need to remove 4,500 from the governmental expenditure. So what we have to do, we have to credit expenditure, general government, general fund, 4,500, and what we do is we debit net position 4,500. Okay, why do we do this? This is to correct the overstatement in the general fund. Okay, because it's overstated by their expenditure are overstated because it's an expenditure for us, expenditure for them, profit for us. Eliminate those profit and expenditure that are within the same government. Now the opposite entry will take place if we have a loss. If we have a loss, then we have the opposite entry. So basically, we took care of this 4,500. The next thing we're going to take care of is interest revenue. So notice this fund, it has interest revenue of 3,000. Remember, any interest revenue has to be added, because the interest revenue represent income from external parties. So that's another entry we have to make. So what does that mean? It means credit interest revenue. We have to increase interest revenue by 3,000, and what we do, we debit net position beginning. So basically, to go back to the beginning of the year, net position, beginning of year, 3,000. Okay, so basically what we did up to this point, we added the asset and the liabilities, we added the investment income, and we eliminated the governmental expenses or the governmental expenditure. Okay, now bear in mind, if we had interest expense, if we have interest expense rather than interest income, if we had interest expense rather than interest income, this entry will be debit interest expense. It will be debit interest expense and credit net position. It will be the opposite, and the debit will be to interest expense, assuming we had interest expense, not interest revenue. So that's basically, then the last thing we need to do is, this is basically a computation. We don't have to worry about this number. Transfer in, okay? basically the general fund has a corresponding transfer out. What do we need to do? We need to debit net position. Again, everything is close to net position. Beginning of the year, 596, and credit other financing sources transfer in. Other financing sources transfer in 596. And basically what we did, we took care of this 596 as well. So three things we took care on the income statement: any profit or loss, any interest revenue or expense, and any transfer in. Okay, so we took care of those. Therefore, we added the internal service fund to the government-wide financial statement. Now let's go ahead and work one more example just to kind of see how this works. Let's go ahead and work this example. So we have the City of Southern Pines maintain its books at a prepared fund accounting statement and record worksheet adjustment in order to prepare government-wide financial statement. So the City Internal Service Fund, which is a motor pool fund, is included in the proprietary fund statement. That's fine. They have an internal service fund for the motor pool. Prepare the necessary adjusting entries in order to incorporate the internal service fund in the government-wide financial statement. So first, they're giving us the balance sheet account, cash, investments, due from the general fund, inventories, capital asset, and we have liabilities and long-term advances from the enterprise fund. So let's go ahead and take care of the first entry. I will do this in an Excel sheet. Maybe it's cleaner. So let's go ahead and, so the first entry is to add all the assets. So what do I need to do? I need to start to add the asset. I'm going to debit cash. They have investments. They have due from general fund. They have inventories. And they have, let's see, what else did they have? They have capital assets, okay. Capital assets net, which is property, plant, and equipment, net of accumulated depreciation, net. Also, they had an accounts payable, and they had long-term debt, long-term advance from enterprise fund. Okay, so let's go ahead, debit the assets and credit the liabilities. Let me just take a look, copy the numbers down. Okay, let me go ahead and input the numbers now. This is 85,000, 125, 15,000, 325, and 960. So we debited the asset, we put the assets on the books. Now we need to put the liabilities on the books. We have accounts payable of 50,000. Long-term debt of 600,000. So total assets 1,510,000. This is 650. The difference is 860. So 860 is the net position. And what we just did, we just added the assets and the liabilities to the books. Let me just make sure the debits equal to credits. Yep, the debits equal to credits. So this is step one. So we're done with this step. Let's take a look at what we are giving, what else we are giving. The only transaction in the internal service fund that's external, that's important to the government, is the interest revenue of 2,800. Now, if we have revenue from external government, guess what? We have to do what? We have to add that revenue. So basically, what we do is we credit interest revenue. It was 2,800. And we debit net position 2,800. So this is the transaction with external parties. That's done. And exclusive of interest revenue, the internal service fund reported net income in the amount of 36,000. What do we need to do with this net income? Basically, in a sense, eliminate it. Why? Because it's overstating the expenditure of other governmental fund. An examination of the record indicate that the services were provided 1/3 to the general government, 1/3 to the what? 1/3 to the public safety, and 1/3 to public works. So this revenue, this profit is coming from those three different departments. Therefore, their expenditure are overstated. So we need to eliminate that profit. So this is the profit that's showing on the income statement of revenues and expenses. Therefore, what we do is we debit net position, and the full net position is 36,000. Since they told you which government expenditure, so you have to credit each government expenditure separately. So we have the general government or the general fund, and 1/3, 1/3, 1/3, that's 12,000. Then we have expenditure, for which fund? We said public safety. That's 12,000. And we have expenditure, public works, the last one. $12,000. So what we did now is we eliminated that profit that we made from other departments, because this is interrelated profit. And the last thing is, since we have due from the general fund, well, it's going to be, you know, due to and due from, it's going to be eliminated against each other. So we're going to debit due to service fund and credit due from general fund. So basically what we do, we're going to credit, because this is due to and due from, so we're going to credit this account here, due from general fund, okay, and we're going to debit due to internal service fund, due to internal service fund, 15,000 and 15,000. Basically, those are the adjusting entries. An example to add the internal service fund to the government-wide financial statement. Now, in the next session, I'm going to have a comprehensive example that includes all the 4 steps that we went over. So make sure to review those 4 steps before you proceed. If you have any questions, any comments, by all means, email me. And if you're studying for your CPA, study hard.